All right, let's jump right in. We are in the middle of one of the biggest, most expensive races in the history of technology. It's an all-out financial war over AI, and the bets being placed right now are going to define everything for the next decade.
So let's start with a number, a truly staggering number. By the end of this year, big tech is on track to pour a combined $530 billion into AI infrastructure. To put that in perspective, that's more than the entire economy of some countries. It's just a mind-boggling amount of money.
And this isn't just for, some cool new apps. No. This spending is fundamental. They are literally building the foundation for our entire digital future. The data centers, the servers, the custom-made chips, the whole shebang that's going to power AI for everyone. But here's the kicker. Here's the paradox that has Wall Street scratching its head. You've got this insane growth, unbelievable demand, and yet investors are getting seriously skittish. So why is spending a fortune on the future making everyone so nervous right now? Let's get into it.
Okay, to really get what's happening, you've got to think of this as a brand new gold rush. I mean, everybody, from the smallest startups to the biggest corporations on the planet, is racing to strike it rich with AI.
And you know the old saying about a gold rush, right? The surest way to make a fortune isn't to dig for gold yourself. It's to be the one selling the shovels and pickaxes. Well, today, those tools are cloud computing power. And there are two giants battling it out to be the main supplier for the entire world.
And those two competitors, the ones forging these digital tools, are of course Microsoft and Amazon. They are locked in an absolutely epic head-to-head fight for control of the cloud.
So let's look at the scoreboard. Now, Amazon's AWS is still technically the market leader, pulling in $33 billion. But would you look at Microsoft's Azure? It's right there at $32.9 billion. But that's not the real story. The real story is the growth. Microsoft is growing nearly twice as fast.
And this chart just makes it crystal clear that 39% year-over-year growth for Azure is just wow. It shows you how aggressively they are snatching up new business and closing that gap on AWS. I mean, don't get me wrong, 20% growth for AWS is fantastic, but 39% is on another level.
But here's the thing. That kind of incredible growth, it comes with a truly insane price tag. And that brings us right back to the heart of why Wall Street is getting so anxious.
This is the paradox in a nutshell. Both Microsoft and Amazon announced these blowout cloud numbers, the kind of results that should have sent their stocks to the moon. And yet, both stocks actually stumbled. The market was clearly spooked by something else hiding in those earnings reports.
And this is what spooks them. In one single quarter, Microsoft spent $37.5 billion on capital expenditures. That's up 66% from the year before. Investors saw that number and the alarm bell started ringing. They started asking, is this spending getting out of control?
You had analysts like Brent Thill from Jefferies pointing to a very specific risk. He basically said, hey, wait a minute, a massive chunk of Microsoft's future committed revenue is tied to just one customer, OpenAI. That's a huge concentration of risk. It's like Microsoft is betting the farm on one single partner's success.
And this chart really shows you what he's talking about. Almost half, nearly half, of Microsoft's gigantic $625 billion commercial backlog comes from OpenAI. Now, don't get me wrong, it's an incredible partnership, but it also means Microsoft's cloud destiny is tied directly to the fate of the company that makes ChatGPT.
Okay, now let's flip over to Amazon. Their investors got a shock too, but it was a different kind of number. It was a massive drop. Their free cash flow, the actual cash they have left after running the business and paying for big projects, it absolutely cratered, falling by 69%.
So, you see? It's the exact same story, just seen through a different lens. Amazon's cash reserves took a beating for the same reason. Their capital spending exploded. It shot up by over $50 billion in a year. They are both spending money hand over fist to build out their AI empires.
So you have to ask, why? Why this unbelievable spending spree? Well, this isn't some chaotic panic buy. This is a cold, calculated, long-term plan to build the next generation of technology. Let's take a look at what they're actually creating.
Microsoft CEO Satya Nadella, he calls it building a token factory. I love that phrase. The idea is to get way beyond just raw computing power. The real goal is to build the world's most efficient AI infrastructure, to optimize everything for tokens per watt per dollar.
It's about getting the absolute most AI bang for every buck and every bit of energy.
And a massive part of this new strategy is controlling the whole technology stack, right down to the bare metal, the silicon itself. Both companies are now pouring billions into designing their very own custom AI chips. Why? To get out from under the thumb of companies like NVIDIA and to gain a critical edge in performance and cost.
For Microsoft, that means their new Maya 200 AI accelerator chip, they're claiming it delivers over 30% better total cost of ownership, which is huge. And they're not stopping there. They're also building their own CPUs, like the Cobalt 200, to optimize absolutely everything from the ground up for their cloud.
And Amazon, yep, they're doing the exact same thing with their Trainium chips. They've already got a huge customer in the AI company Anthropic, which is using almost 500,000 of these chips already and plans to scale up to over 1 million. The real test for Amazon, though, is to prove that other big customers will jump on board with the same enthusiasm. So when you piece it all together, the insane spending, the nervous investors, this long-term strategy of building everything in-house, you start to see this for what it really is. It's a colossal, industry-defining gamble.
When you boil it all down, it's two different titans making two very different bets. Microsoft is betting it can weave AI into every corner of its vast software empire, using these huge deals with AI pioneers to lock in its cloud business. Meanwhile, Amazon is betting it can defend its #1 spot by simply being the best and most cost-effective landlord for the AI gold rush, using its custom chips as a secret weapon.
This is a high-stakes game with hundreds of billions of dollars at stake, and it's completely reshaping the tech world as we speak. The spending is astronomical, the risks are very, very real. But the prize? Well, the prize is nothing short of total dominance for the next generation of computing. So the only question left is, who's playing the winning hand?